Hi everyone, welcome to Growling Finance channel. In this video, we will talk about what happened during the last week and where does the Chinese bond market go in a bad optimistic environment. So let's start. Well, in the past weekend, bond market come to a desert of new information. The total bond yield curve stepped in the trough of its time. At the moment, I was thinking whether the physical and monetary policies will be conducted on time, and how far will the bond market go in nowadays economic environment. Well, let me tell you the following story. So in past weekend, a few news came out. In the fundamental part, CPI was 0.1%, which was as expected one, but weaker than previous one, 0.2%, which was pretty low by the way, and the PPI was minus 2.3%. This time PPI was better than before and expected, but still has a long way to go to back to the prosperous range. I mean above the zero, guys. So we can see that the economic environment is optimistic for bond market, but which also means that the economy is still in a not that good position that we are not happy to hear. In addition, the weekly data land transaction area of community buildings of 30 large and mid-sized cities decreased last week. Like I said, one time good doesn't mean always good. So was there any new powerful policy conducted recently? Well, during the last week, for fiscal policy part, the SCIO held a policy briefing on Wednesday about promoting large-scale equipment upgrades and consumer goods trade-in programs with great intensity and scope. According to the meeting, the extent of policy was subtle and the most policies was expected, so the bond market was cheered as a consequence. For monetary policy part, the PBOC seemed pretty strained for cutting policy interest rates. Maybe it was because the purpose for maintaining the stable level of renminbi exchange rate. And furthermore, the PBOC decided to suspend the purchase of government bonds in the open market temporarily, which caused a huge increase in bond yields on a Friday morning. But the bond yields have gone down gradually since the demand for bond assets still keep bond yields from extreme increasing adjustment. For the stock market, the SSE index lost the key point 3,200. It's a pretty bad performance, by the way, which also gives a hand to the decreasing of the bond yield curve. And the funding condition maintained loose until Friday when the tax season of January was about to begin and the MLF was ready to be implemented constantly. So above all, from the fundamentals to the funding condition, most elements stand with the trend of bond yields decreasing, except some distractions like actions of PBOC and developing fiscal policies. As I insist, this period of time is fluctuating for bond yields, and maybe the range of it is big, but every time of its increasing adjustment means a good time for buying, which may not change until the first week of March. So guys, this video is about what happened in last week, but I want to say even if the economy situation is under pressure and we are in a good time to bond but bad time to life, we still have to keep confidence to our country, our party, and more importantly, to ourselves. Well, we will get through this difficult period of time. Anyway, once again, thanks for watching this video. If you like Growling Finance series video, if you want to know more finance information about the Chinese bond market and the economy situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and I'm waiting for you. So bye guys, until next time.